Welcome back, guys, to another Zero DTE video, and today Ernie's going to be talking about volatility, so make sure you stay tuned. If you're interested in becoming a pro trader, check out the link in the description where you can find Ernie's education platform. Enjoy, guys.
In our strategy, because of the changing environment and what that actually means with those changes, in low volatility, low VIX, we get increased gamma risk or increased sensitivity to price movement. So when we're in a low volatility environment and price or the value of your flies are far more sensitive to price movement, then you have to take those profits early. It just doesn't make sense to hold on because you may not get that opportunity again because of the increased sensitivity to price.
Yeah.
That is how we adjust to low volatility. And that's because of the steepness of the profit curves, right? That's what literally creates the sensitivity to price. And you get the steepness of the profit curve because of accelerated premium decay in low volatility. That also forces us, because there's less opportunity and it's more sensitive, we have to trade smaller. So therefore, our total opportunity is smaller as well. So all of those force us to make quicker decisions in that type of environment. That's why hanging on when you have a quick profit like that is not an optimal idea in a low volatility environment. In a high volatility environment, it's exactly the opposite. Low volatility, hey, I get a quick profit, take it. It used to be when we were only doing zero DTE, that meant, hey, if I got a sharp move early in the day, and I've said this before, your strategy should be take the damn thing off. Or if it went into the profit tent early, I would say that as long as it stays in that profit tent, hold it. But as soon as it touches that profit tent, you're out. That's just the way you have to act in this type of environment. When we get a high volatility environment, everything's going to change. For one, the premium is going to be delayed in decaying. That means that most of the decay isn't going to happen until much later in the afternoon, and it's going to happen fast when it does happen. However, until that happens, and because of the lowered sensitivity to price movement, and price will be moving all over the place, we'll be able to put on much larger flies, giving us much more room to move with much greater profit potential, meaning that we'll be able to put them on cheaper and potentially capture more profit with more time to make decisions. In those cases, yeah, you might get a quick profit, but even if it moves away from it early in the day at 11, 12, 1 o'clock, you still feel like you have plenty of time because it's not changing your price very much, moving back and forth. Then if it starts creeping up, then you start using your profit management framework. It's the same profit management framework, it's just under different context with bigger numbers, and you take your profit. If it stays inside your profit tent, you hold on. You just won't have to be making super fast decisions. You might even, instead of touching the edge of the profit tent, you might even let it leak out a little bit because you have time and it's not affecting you as much. And on top of that, you have more profit, which makes it easier to make those decisions.
Thanks for watching, guys. I hope you enjoyed the video, and if you did, make sure you hit that subscribe button and hit the like button below. If there's any questions that you might have for Coach Ernie, make sure you leave them in the comment section. Thanks, guys.